Now, South African listed property stocks outperformed local equities last year by an impressive 18% in total returns. That's despite the downturn in global financial markets. On Monday, we spoke to Madison Property Management Fund, and they weren't too rosy about the outlook for the sector in 2009. Today, the JSE's largest listed property group, Growthpoint, released its results. Now it's back over to Gunther at the JSE. He's with the Growthpoint CEO. Gunther, it's over to you.
Thank you very much, Devin. Norbert Sasser, CEO of Growthpoint, joins me. For starters, can you give us a summary of your performance for the year?
Sure. I think it's actually a half-year result for the 6 months to December. We managed to increase our distributions per share at about 10.2%, which I think, given the current economic environment, is a pretty decent result. A couple of other highlights would be the market capitalization, which has gone up from, I think, about 14.5 odd billion at our year end, which was June 08, to 19 odd billion at the moment. And that helped us get into a number of the indices, both here locally. We went into the JSE Top 40 Index in December, slotting in at number 31. And then we also slotted into a number of the international indices, the MSCI Morgan Stanley Emerging Market Index, as well as the EPRA Nareit, the FTSE EPRA Nareit UK-based index, also an emerging market index. And that obviously helped our liquidity quite a bit, and trading in our share quite a bit. One of the biggest highlights probably of this period would have been the rights offer, the very successful rights offer that we concluded, that we launched in mid-December and concluded now at the end of January, whereby we raised 1.74 billion rand, and that particular rights offer was actually oversubscribed from shareholders or by shareholders.
Can you tell me a bit more about that, please? What are you going to use that money for?
Sure. I think it isn't earmarked for anything specifically. Just generally speaking, we've got quite a big refinance of a mortgage, CMBS, a commercial mortgage-backed securitization bond, in November this year. It's a 1.56 billion rand bond that we have to refinance. And I think everybody's aware of the difficulty in the capital markets and the lack of liquidity in the capital markets at the moment. So we're just positioning ourselves ahead of time so that we don't run into problems there. But I also think that these markets that we're in at the moment are creating very good opportunities to invest, both locally as well as internationally. If you look at the state of the global real estate market, they've come off their highs. They're probably 80 to 90% down off their highs, and creating opportunities. So, some of that money we could potentially earmark for further investment, both locally as well as internationally.
Speaking of which, you reported quite a few million rands worth of investment, already made acquisitions. Is there any particular target that you'd be perhaps willing to shed some light on?
No target specifically. I think generally we wait for opportunities to present themselves in these kind of markets where developers perhaps might find themselves in quite a difficult spot, not able to refinance some of their debt, or perhaps too high levels of gearing. We know that the banks at the moment are all looking to raise the margin that they're charging on their debt, and I think generally that puts a lot of pressure on developers or maybe some smaller investors. We spent about 1.2 billion in the 6 months just on existing projects, completing existing projects. Some of the big notable ones in there would have been the extension of the Investec head office building at 100 Grayston Drive. We added 23,000 square meters there. That's about a 475 million rand investment. We've added down in Cape Town, Montclair and Claremont, we're completing a 30,000 square meter mixed-use development there.
Sorry, we're running out of time, so I just want to interrupt you quickly to give me an outlook, please, for the rest of the year, for the sector as a whole. I spoke to Madison on Monday. They weren't too happy. What about you?
I think we share some of the views of Madison, that generally speaking, the trends of the past has changed. We've had a very good bull run for the past 3-4 years, and if you look at the, let's say, leading indicators at the moment, they're all showing that the fundamentals have changed, and we saw that change towards the last quarter of last year. Vacancies are starting to increase. Debtors and our clients are starting to battle to pay their rent. Nothing too dramatic, but definitely the trend of the past has changed, and we are looking forward to some tougher times.
Well, Mr. Sasser, thank you very much for your time. Unfortunately, we're out. But yeah, that's it from Norbert Sasser, CEO of Growth Point.
All right, thanks very much, Günter Deutsch there.